the financial statements, they have given you the values like triple, they have precised it in thousands, right? In thousands. So you can see 000, again 000. So it means they are precising it in thousands. Assalamu alaikum. Cost of sales. And there are few things like raw material consumed, right? Then we have staff cost. Then we have depreciation. Then we have loss on disposal of non-NCA. NCA stands for non-attached, right? So the raw material is 70. Staff cost is 94. Then we have depreciation 118. And we have loss on disposal 18. Right, sir? So the total is how much? Yes, so this is 300. Then you have profit from operations. Profit from operations. And it is how much? 720 minus 3. Then you subtract interest payable. Interest payable. It is how much? 28. Then you are left with profit before tax, right? Profit before tax. And it is how much? 420 minus 28, 392. Then we have taxation. It is how much? 124. And then we have profit after tax. And it is 392 minus 124. Right, sir? Okay. The further he is also mentioning. So opening balance. How much is that? 490. Then we have profit for the year. And this is here, you see 268 is the profit, right? So I can change the color of this so that you can understand that we have taken this value from here. Okay, brother Emmanuel? Perfect. Then dividend. This is what we declared the dividend, and it is how much? 72. And it is in bracket. Why? Because we are subtracting it. So that gives you retained earning at the end of year. So it will be 490 plus 268 plus 686. Brother, please. Brother, can you see? Mashallah. Your eyesight is perfect. Alhamdulillah. Right side. So this is our income statement of profit or loss. The problem is that when we prepare this income statement, we write this sales 720. It is based on accrual assumption. Now, what is accrual assumption? If you remember, in the session 1, brother Emmanuel, when we studied first session, I told you the definition of income and expense. Do you remember or not? Remember? Not. And if you remember the definition of income, it says that sales is the increase in economic benefit during the year, effect on asset increase, effect on equity increase. So there is no information about cash. How much cash we have received, we do not know. Why? Because we are doing this on accrual assumption. So we are recording sales, our income on the basis of the definition. So how much cash we have received against that sales, we do not know. Now, if you come back to this, please pay attention. Now, if I ask you a question, that let's suppose this company has made sales of $720,000, but how much cash did the company receive against this amount? You can't say anything. You do not know the cash position. We do not know the cash. Similarly, if you talk about this raw material consumed, staff cost, everything, these are the expenses, but you cannot say how much cash is paid. Why? Because if you remember, we have discussed the definition of expense. Just have a look, please. The definition of expenses. It is decrease in the economic benefit during the accounting period. It can decrease your asset, it can increase your liability. It has negative impact on the equity, but there is no information related to cash. So, whatever is happening here, whether it is sales, whether it is expenses, whether it is profit, you can't be sure that how much cash you have received against that particular amount. That is why this chapter relates to cash flow statement. Now we have to prepare a statement that should show the clear picture of cash, because our financial statements cannot show the clear cash position. Is this clear? Okay. Now, the next thing we have is our financial position. So if I ask you to please help me out in writing the values, because okay. So brother, we have this Kane, sorry, Kane company, statement of financial position as on 31st of December 20x2. Right, sir? Okay, first thing we have is assets. Okay. We have financial position 2x2, and also we have 20x1, right? So we have dollars 30 here. We have dollars 30 here. We have $30 here. We have, right, sir? Now the first thing we have is assets. Okay, how much is the assets? First of all, we have non-current assets. Can you guide me, please? NCA. Okay, how much is the value? In the later corner. Okay, first we have cost, right? Cost. How much is the cost? 1596. Then we have what? Accumulated depreciation. This is accumulated depreciation, right? And how much is that? 318, mashallah. So in the previous year, we have cost 1560, 1560, and the depreciation was 224, right, sir? So here we have line, this one. So we put here this minus this, because we have to subtract accumulated depreciation from our accumulated from the cost. Then we have current assets, right? Yes. CA. Okay. Inventories. 24. And how much in the previous year? 20. Then we have trade receivables. 76, then we have how much? Then, all right, sir. All right, sir. So the total assets will be this plus this, this plus this. Then we have equity. Share capital. 360. What was before? 340. Then we have share premium. Sorry. 36, then 24, then how much? 686 and 490. So it will be this plus this plus this, right? And it will be this plus this plus this. Then we have liabilities. Long-term liabilities. It is 200. And here is this how much? 500. Then we have current liabilities. Current liabilities. Trade payables. How much? 12. And before that, 6. Then how much? 102. Here 86. Then how much? There is information after the question. Read this information, this paragraph. What it is saying? Okay, what it is saying, brother? Purchase. Okay, he's saying that during the year the company paid 90,000. Paid mean cash is decreasing. For our new piece of machine proceed received, cash is increasing 12,000. So prepare a statement of cash flows. Now, let us prepare a statement of cash flows. So now you have to be very vigilant. Kane company, we are preparing statement of cash flows, right, sir? For the year ended, 31st of December, 2020, sorry, 20x2, right, sir? Right. So the first thing is we start, there are three activities, right? The first activity is cash flow from operating activity. So start from cash flow from operating activity. I would appreciate if you note with me one by one. Just note with me, please. Only the cash flows. Right, sir? So always remember, we always start from profit before taxation. We always start from profit before taxation. So where is profit before taxation, brother Emmanuel? Here. It is here, right? So let me put the same color. It is here, right, sir? Rather, I should pick from here. Is equal to, this is your profit before tax. And how much is the value? 392. This is very important topic. Very, very important. If you learn how to prepare cash flow statement, it means you have learned a lot. Okay. Then what we need to do is, if you can see these depreciation charges, depreciation and loss, please, brother, just have a look. These two things. Let me put green clear. These two expenses were subtracted in the statement of profit loss, but we have not paid anything against them. Did we pay depreciation to someone? Do we pay depreciation to someone? If there is a loss, do we need to pay something? No. So we do not make any kind of cash payment, but we subtract it from income statement. So what you need to do, you have to put it reverse, add back. Okay. Now, what you need to do, you will write here, add. Adding back. So we are adding back what? Okay. The first thing we are adding back is depreciation. And the amount is 118. Right, sir? Then we are adding back loss on disposal. And the amount is 18. And further, we are also adding back the interest payable expense, because we do not pay it to someone. So we add all those expenses back in the cash flow statement. How you said? Okay. Whatever those expenses against which we did not make any kind of payment, we have to add back in the statement of cash flows. Now we are 100% sure that against depreciation, we did not make any kind of payment. So we add back. We are 100% sure the loss on sales of tangible assets, we did not make any kind of payment, we will add back. right? And again, the interest expense, we do not pay anything, we'll add back. Once you are done with, you write here, profit before working capital changes. Profit before working capital changes. Brother, step number 3, cash flow statement. Page number 74. So we are doing this question, very, very important. Okay. And if you come late, no problem. The session is being recorded. You can have the recording. Right? So, Brother Manu, we started from profit before tax. Whatever expenses have been subtracted against which we are 100% sure that we didn't make any kind of payment, we will reverse them in the statement of cash. Like depreciation, we did not make any kind of payment against depreciation, so we'll add back. Loss on disposal, we did not make any kind of payment, so we'll add back. Regarding the interest, we didn't make any kind of payments, we'll add back. So this is profit before working capital changes. And how much is that? You will add everything. This, 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 this. It's 556, right? After that, a very important thing is now you have to make adjustments regarding the working capital. Now, what working capital is? Please pay attention. In your current assets, we have inventories and trade receivables. Can you see this?
Yes.
Inventories and now let me change the color. Let me put this. This is your current assets, inventories and trade receivables, and this is your current liability, which is called bank is the cash now, so we do not. Yeah, actually, this is what we are going to find. Your question is absolutely right, brother. This is the final answer that should come at the end of the cash flow statement, right? This is what we are doing. You're absolutely right. But so let me make it bold and let me change it color. Okay. And let me put your name in the comment section. What is your good name? Amir Shah. Complete name? Ahmed Amir Shah, right?
Yes.
From
Yes.
Kerala?
Yes.
K spelling?
Kerala.
Kerala. India. Right, sir? Wow. So whenever we drag our mouse up this value, your name will be there. So this is what we need to find out. Now, this is our working capital. Always remember your current assets and your current liability is your working capital. Right? Now, please pay attention. If I talk about this inventory, membrada, inventory, in 2001, it was how much? Now it is how much? So is it increasing or decreasing? Increasing. It means what? You must have purchased it or you must have sold it. We must have purchased it. So when we purchase inventory, do we pay cash or we receive cash? We pay cash. So it means it's a cash outflow. Should I repeat? Listen carefully. Before that, inventory was 20, now it is 24. It means before that it was 20, now it is 24. It means your inventory is increasing. So inventory is increasing because you must have purchased it. So when you purchase, you pay cash. Okay, cash out. Now from here, we can write here. Okay, we can write here. When assets, when is it the right spelling?
Assets.
Now it's right. Element, movement, cash. Okay, please pay attention. When your asset movement mean increase, it is treated as outflow. When your asset increase, it is treated. Okay, so When your asset decrease, it will be inflow. Cash into the business. When your liability, when your liabilities increase, inflow. And when your liability decrease, it is out. Liability increasing, you are taking loan from somewhere. So your cash is increasing. Now come back. What we have discussed so far is very interesting point, and that is basically okay. Now, before that, how much inventory? 20. Now it is 4, so it is increasing. So we'll subtract here. Increase in inventories. And the amount is, take the difference. 24 minus 20. Or make like this, sorry. Make like this. 20 minus 20. So that your answer should come in negative. Ma'am Radha, can I ask question? Ma'am Radha, inventory is increasing. So why I'm subtracting here? You didn't get inventory is increasing, but why I am subtracting here? Because we are preparing cash flow statement. So inventory is increasing because you have paid cash. So we have to subtract it. Okay. So the next thing is trade receivables. Okay. Okay. Can I ask you? Now, receivable is increasing or decreasing, Ma'am Radha? Receivables, trade receivables, increasing or decreasing? Okay, wait. Yeah. Now please check. Receivable increasing or decreasing? In 2000, it was increasing. So it means cash inflow or outflow? Asset increase outflow. Asset increase outflow, asset decrease. No. So asset is increasing, brother. Receivable is increasing, right? 58 minus 76. So that gives you minus 18. Now the next thing we need to discuss is our trade payables. Now be careful, please. Brother Emmanuel, trade payables increasing or decreasing? Just have a look here, please. Trade payables increasing or decreasing? Current liabilities. Current liabilities. Before in 2001, it was 6. In 2002, it is 12. So it is increasing, decreasing, increasing. So when liability increased, inflow. So you will write trade payables. Inflow. AI. AI stands for AI. LI. What do you mean by AI and AI mean asset increase? LI mean liability increase. Okay. Or if you remember like this, asset increase outflow, AIO. AIO and LII. AIO, LII. Asset increase outflow, liability increase inflow. Or you can learn it is like this. This is learn like this. AIO, ADI, LII, LDO. AIO, ADI, LII, LDO. AIO, ADI, LII, LDO. Now, once everything is done, then we find out cash generated from operations. This plus this plus this plus this. It gives you 540. Now, once it is done, the next thing we subtract is interest paid. Very interesting. Interest paid. Then we have dividend paid. And then we have tax paid. Very interesting. Tax paid. Dividend paid. Okay, let me teach you. Very, very simple. Okay, can I ask you one thing? Brother Emmanuel, right? In 2023, okay, the fee payable to Icon was $1,000. This is what it was payable. You didn't pay this. At the end of 2023, how much it was payable? Sorry, right? This is at the end of 2023. This is what payable. Okay. At the end of 2024, Icon Training said you that still it is how much payable? Okay. And during the year, during the year, they charged you fees, which is $9,000. Do you understand what I'm saying? Now they have given you this status. They said at the end of 2023, how much the balance was unpaid? 1,000. At the end of 24, what was the balance unpaid? 1,500. And during the year, we have charged the fee. How much? Can I ask you? During 2023, how much you actually have paid to them? Near. Good. Recalculate. You must know how much you actually have paid.
Pay means
You have already paid to iCountries. Listen, at the end of 2023, the balance was how much? During the year, they charge you fees how much? There is still outstanding balance 1,500. They say you still have to pay us 1,500. So how much you actually paid?
7,500.
How much?
7,500.
And
What paid? It's paid.
how much you already paid? Yes, what is your answer?
Payable.
Paid. How much dollar you paid to I continue? What is your answer? What is your answer? How much?
1,500.
4,500. 7,500.
It's not fair.
What happened, brother? What happened? Listen, listen. At 30, now let me clear more. At 31st of December, 31st of December. Listen, at 31st of December, Icon Training Center call you. Listen, brother Emmanuel, you still have $1,000 payable with us. Do you understand what I mean? Okay. Now, during the year, you took courses worth $9,000. Okay. Now, again, at 31st of December 2024, Icon Training Center is calling you and he is asking you that you still have 1,500 payable with us. How much actually you have? 8,000. How, brother?
Already pay 1,000 rupees, 1,000
Last year, yes.
last 20. Then 9,000 charges.
10,000.
Added
10,000.
So the balance 1,500.
Listen. This gives you 1,000 plus 9,000. He's absolutely right. Now, this is total you have to pay. If still payable is 1,500, then how much you have already paid is 8,500. Okay. If Icon Training Center calls you and says still you have 4,000 payable with us, then how much you actually have paid? Yes. If you put 4,000 here, it gives you 6,000. Okay, very simple. Do you understand, my brother? If you understand this scenario, then come here. Now we have interest paid. What we have? Interest paid, right?
Yes.
Okay. Now where is interest payable, by the way? It is in the current liability. Can you see here interest payable? There is no interest payable. There is no interest payable. Brother Emmanuel, please. Okay, can I ask you one thing? If Icon Training Center you, there is nothing payable at the big end of 23 and nothing is payable at the end of 24 and we charge 9,000, it means what? You have already paid 9,000.
Yes.
So if there is no interest payable in the current liability, so whatever interest expense charged here, where is it? This is already paid. So we will subtract here 28 because whatever charged we have already paid. Because there is nothing at the end of the last year and there is nothing at the end of the current year. So whatever is charged, we have paid. Then we have dividend payable, which is very interesting. Now, dividend payable, please have a look. Just have a look here. Dividend payable, brother. How much payable in the start of the year? 24 in the start of the year. How much payable at the end of the year? How much dividend charged during the year? 72. So how much we have paid? So the formula will be, let me teach you the formula. Opening plus charge minus closing. Listen, the formula should be opening, okay? Opening plus charged less closing. This is the formula. Closing. Opening plus charge, sorry. Opening add charge less closing. So can we see this? OCC. Opening plus charge less closing. Or can we like OAC LC? OAC, like OAC LC. OAC LC. OAC LC. OAC, 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 OAC. When you call your husband, say OAC, he should have said LC. So, brother, what is the opening balance in the dividend? It's 24. I should write it. So it will be 24 plus 72 minus 30. So that gives you 24 plus, sorry, because the value in the minus, that's why I'm putting minus, otherwise it is plus. So don't get confused, okay? And minus 30. So that gives you 66 outflow. Bracket 66. Right, sir? And brother, 66 minus, okay? OAC, LC, OAC, LC, OAC, LC. AIO, AIO, LII, LII. Lot of concepts to remember. Huh? Then tax paid. Okay, calculate. Let's see who will calculate tax paid. Do it. Find out. Tax paid. Calculate. Tax paid. Ma'am, brother, what is the amount? Sure. Everybody? Pretty sure. Wow. 108. Now you understand how do we calculate the things, right? MashaAllah. So let us find the so 540 plus sorry. This is cash from operating activity, cash from investing activity. Very simple. Investing activities, right? Very simple. Now, there is, it is already given in the question, payment and receipt, payment and receipt. In the adjustment, if you can find, it is already given. In the paragraph, last paragraph, brother, remember? You paid 90,000 for the purchase and 12,000. You remember now? You remember? So 90 you paid and 12 you receive. Brother Emmanuel, you remember?
Yes.
So that gives 78,000. And after that, we have financing activity, cash from financing activity. We started in June. No? Where is CFS? CFS Friday. CFS Friday, right? So today is session number 8. This is session 7. This is session 8. Today is what? 19th of July. So we have respected Murada, Emmanuel, Jiswan, everyone is here. Then we have Brother Kiniapan. Then we have Amir Shah and Brother Nadir. Okay. Cash flow from financing it. Right? Now just have a look at this portion. This one, from equity till long-term liability, only this portion. Amisha, brother,
Yes.
first we take share capital. How much share capital we have? Is it increasing or decreasing?
Please.
Increasing. So when liability increase, it is inflow. Okay, then we have share premium.
Premium.
Increasing, decreasing. So when liability increase,
Info.
long-term loan increasing, decreasing,
Decreasing.
increasing, decreasing,
This.
long-term loan decreasing. So when loan is decreased, it is outflow. So we put minus here because we are paying it, right? So the total will be. Please pay attention. Please look at above, right? Look at the LCD. Please, please. Right, sir? Okay. Now we have. This is long term. Long term. Now we have net increase or decrease. Please pay attention, please. So we have these values with us. Please pay attention. So you have 338 plus 78 plus 260. It gives you how much? 8. Now, brother, what is the opening balance of the bank?
This.
Opening balance of bank 56. It is positive, you have to add it. So when you add it, it gives you, Red Bull gives you win. 56 plus 8, 48.